Hello and welcome everyone to this week's COT review. I'm Thomas from COTbase.com. Today we're going to have a look at the 46th COT report in 2014, and as usual we're going to start off with the changes in commercials position. So here we go. We've got S&P 400 and 500 on top of our list. Let's start with 400, where we have a 20% change in commercials positions. Of course, if you look at the chart, it's pretty obvious that it is a bearish COT change signal, a bit larger than average. No question about that, especially large speculators. If you look here, it is of course bearish, and let's open and move on to the 5-year chart to see how extreme this market has become. You can see that we had small speculators being over optimistic, very optimistic about the market. Of course, this is more of a bearish sign. But other than that, we do not really have a significant extreme yet. We're getting closer to one. If you look at the chart, we'd reach a nice bearish extreme level around 30,000 contracts net short in case of commercials. But if you look at the chart, well, it didn't really stop the rally. So question whether this would happen if they reach those levels again. Let's move on and just have a look at the S&P 500 for a moment. I'm pretty sure we're going to be seeing a very similar picture. Yes, the change size was similar, and the 5-year chart, here we go. Yeah, the extreme is also very close to what we had in the S&P 400. So there's really not too much I can say over here. The chart does look a bit more stronger than the S&P 400. So I'd say we should be very careful with any bearish move in this market. And then moving on to Oats, where we have a 17% change in commercials positions, larger than average, but we do see much greater changes in the past. This one is a bullish COT change signal. Moving on to the 5-year chart, we can see that we do not have a COT extreme situation present in this market right now. We'd have a nice bullish extreme if commercials and large speculators would be reaching net zero levels, and a bearish extreme in case of commercials below, let's say, 5,000-6,000 contracts net short level, and of course in case of large speculators above 4,000 contracts. So again, not really a market to talk about. Let's move on and have a look at large speculators COT extreme and see whether we have anything over there. Natural gas for first market, 184 report extreme. We talked about the natural gas a few reviews ago. I was telling you how good this bullish COT extreme signal is, even though it is not all-time extreme. Was definitely relatively large, and you can see that price has started to go back again. It's back in rally mode right now. Question, of course, whether it's going to be able to move past this level, and then we could really state that this COT extreme signal had its effect on price. That's a question to be answered in the upcoming few days or maybe weeks. What's unquestionable on this chart that you can see is we have a bullish extreme in the natural gas market, and eventually we would be expecting prices to react to that signal. Platinum, our next market, with 117 report extreme in large speculators. Let's open the 5-year chart. Here we go. And you can see that the extreme is pretty visible, actually. We're not talking about a huge all-time extreme, but it is definitely not that far from those levels. So maybe small speculators could be a bit more pessimistic. That would be something that we had actually a few reports ago, and if you look at the chart, that was actually a decent signal, and since then prices could not go any deeper than that level. That's of course not too far away, so the question is whether we're going to be breaking those levels, or we're actually going to see price stabilizing on these levels and see a rally starting off in the near future. Crude oil, our next market and last market for the review. We have a 78 report extreme in large speculators positions and 72 report extreme in commercials. Well, the extreme is visible over here. Nothing too special, actually. If you look at the chart, this 5-year chart, we do see much greater extremes in the past. These extremes were actually good signals. The only difference is that we have prices much lower. Question is this extreme going to be able to stop this decline? I don't really think this is such a major extreme that we should build our trading idea on. We should be more careful than that. The extreme would be more obvious if we'd be at such levels I'm showing you for commercials. That's in contracts terms, well, at least 180,000, 160,000 contracts net short level. And in case of large speculators, that would be below 200,000, 180,000 contracts net long level. That's not the case. So it's unfortunately not a too visible extreme at the moment. That is going to be all for this week. If you would like to have a look at the COT charts, you can do so at our COT charts page. If you would like to have a more in-depth and detailed COT analysis, then this is the page you should be looking at. We can show you what you can do. You can add the long-term trend to the table, the volume and open interest scores, the COT index. You can, of course, look at other markets, the treasuries, and, of course, market complexes as well. And you can look at new COT report types like the CIT, the TIF, the disaggregated, and, of course, the futures and options data. And you have the possibility to do your historical analysis on any older report dates as well. I hope you enjoyed this review, and I hope to see you next week. Have a great weekend. Take care. Bye-bye.